May 22nd, 2026, buckle up. Today's news is absolutely loaded. Quick shout out to today's sponsor Compete Token, the gaming crypto that actually has real games behind it. Links in the description, go check it out. Trump Media just moved $204 million in Bitcoin to Crypto.com, and that almost always means one thing: somebody's about to sell. The company already posted a $406 million loss last quarter, mostly from sitting underwater on its own Bitcoin bag. Now they're shipping the coins to an exchange. You do the math. Shares are down 70% from their peak, and the whole "we bought Bitcoin to protect ourselves from financial discrimination" pitch is aging like milk in the sun. Buying high and shipping to the exchange door is not a treasury strategy, it's a press release with a sell button attached. Tough day to be a Trump Media bag holder. Polymarket got popped for about $700,000 this morning when somebody walked off with the keys to one of their internal wallets. On-chain sleuth ZachXBT spotted it. Bubble Maps mapped the funds across 16 addresses, and Polymarket confirmed user funds and markets are untouched. The contract logic was fine. The operational security was the leak. This is the new pattern, by the way. Attackers stopped trying to break smart contracts because the smart contracts actually got smart. So now they just go after the boring stuff like admin keys and rewards wallets. Lock your treasury, friends. House Republicans just dropped an insider trading probe on Kalshi and Polymarket, and Chairman James Comer wants every internal document they've got. Know your customer files, surveillance policies, communications, everything. The catalyst was a US soldier getting arrested for betting on the timing of American military strikes using classified intel, which is a pretty bad look for the wisdom of crowds. Comer also wants every communication tied to wagers on the Iran war and the Venezuela strikes. When the New York Times finds over 80 suspicious trades on your platform in a single report, "We're working on it," stops cutting it. The prediction market industry just got a homework assignment. Kalshi's response to the probe was incredible. Same day, they rolled out a brand new lobby group called Americans for Fair Markets, run by a former Trump White House staffer. The timing was so coordinated, it might as well have come with a press kit. Nothing says we have nothing to hide like spinning up a super PAC adjacent operation the morning Congress kicks down your door. Their pitch is that banning prediction markets would push everything offshore to unregulated platforms with zero protections, which, honestly, fair point. But also, this is the lobbying world's version of catching your homework on fire. Admirable speed, terrible optics. Welcome to the big leagues, Kalshi. Mark Cuban just dumped most of his Bitcoin, and his reasoning is the most boomer-coded thing I've ever heard. Gold ripped to $5,000 during the Iran war while Bitcoin sagged to $77,000, and Cuban basically said, if it doesn't hedge, I don't want it. My guy, gold has a 4,000-year head start. He also said crypto still hasn't found an application for grandma, which, sir, your grandma also hasn't switched off cable yet. Bitcoin's having an off year, sure, but selling near the lows because gold had one good month is the most I sold my Amazon in 1999 trade of the cycle. We'll see who's laughing in 2 years. The co-founder of F2 Pool, one of the original Bitcoin mining pools, just booked himself a seat on the first private crewed SpaceX mission to Mars. Chun Wang's whole pitch was, quote, "Don't trust, verify, I verified space." That is officially the most Bitcoin sentence ever uttered by a human being. The round trip is roughly 2 years. The Starship hasn't actually reached orbit yet, and the planet flyby itself only lasts a few hours. But you know what? Bitcoin made a mining pool guy rich enough to literally leave the planet. If that's not bullish on the entire decentralized future, I don't know what is. The SEC just hit the brakes on its big tokenized stocks innovation exemption right as it was about to drop this week. The sticking point, letting third-party issuers tokenize company shares without the company's permission. Apparently, public companies are not super pumped about a million floating digital versions of their stock confusing dividends and shareholder votes. Wild that anyone needed to think about that. Commissioner Hester Pierce, the crypto-friendly one, came out swinging for the rule, saying it only covered tokenized versions of stocks you can already buy, not synthetics. She's right, and the industry needs this. But yeah, maybe don't let random people tokenize Apple shares without telling Apple. Baby steps. OKX and the Intercontinental Exchange, that's the parent company of the New York Stock Exchange, are launching regulated, never-expiring oil futures aimed straight at hyperliquids market. Translation: traditional finance saw a decentralized exchange eating their lunch and decided to copy the homework. This is exactly what we've been screaming about for years. Hyperliquid's token just hit an all-time high near $62. The platform has $9.6 billion in open trades, and now the suits at the New York Stock Exchange are scrambling to ship a regulated clone. Couldn't ask for a better endorsement of the model. Hyperliquid built it, Wall Street is forced to follow. While the majors chopped, Near Protocol just ripped 19% higher, leading the entire CoinDesk 20 index. Hyperliquid kept printing all-time highs, and AI-themed coins like Fetch and WorldCoin all popped double digits in the same session. The rotation is real. Money is hunting the next narrative while Bitcoin takes a nap. Bitcoin's hanging out at $77,000, Ethereum's near 2,100, and somehow the action moved entirely into the alts. This is the part of the cycle nobody warns you about. The majors get boring. The AI coins eat. Adjust your watch list accordingly. A House subcommittee finally sat down to admit the Bank Secrecy Act, which was written in 1970, might not be ideal for fighting AI-powered financial crime in 2026. Witnesses pointed out that banks file 5 million suspicious activity reports a year and 21 million currency transaction reports, and almost nobody reads them. The chairman called it a, quote, bloated surveillance machine. Yeah, no kidding. TRM Labs testified that North Korea ripped over $2 billion from crypto last year, while AI-driven scams jumped 500%. The fix everyone agrees on: use AI to fight AI, give exchanges actual safe harbor to freeze stolen funds, and stop drowning regulators in paperwork from 1970. Crazy idea. Actually modernize the modernization law. One more shout out to Compete Token, gaming crypto with real games, links in the description. That's the news. Like, subscribe, and I'll see you tomorrow.